Joining us now to talk about the run in these and other metals, Edward Meir, senior base metals analyst at Marex. And Edward, I'd love for you to set the scene a little bit, especially about the copper move. While it's been incredibly aggressive recently and there's been this talk of a real supply-demand mismatch, it seems also like there's just heavy speculator and investment demand in the short term. So how does that set up for you right now?
Yes, it's thanks, Michael. It's been kind of a perfect storm, as you said. We've seen demand pretty strong, mainly coming from the AI/EV space, especially out of China, but certainly here in the U.S. as well, as a lot of infrastructure spending gets underway. We have the EV kind of push, a lot of it government mandated, which is driving demand as well. And on the supply side, we have lots of issues with some key producers, namely in Panama, in Chile, Peru, Indonesia. And then add into the mix sort of the hype that all this is generating. You get the fund community participating. And our studies show that they are the main drivers in exaggerating the moves once they come into the market.
So then if this is perhaps to some degree an exaggerated move, does the market seem a little vulnerable here, or what would your expectation be?
We've been saying it's been vulnerable for a couple of months now, and in fact all the forecasters, all their highs have been just blown out of the water. Nobody anticipated such a big move, including yours truly. But having said that, yes, I think we could see a bit of a pullback. In fact, we're seeing some selling today. Keep in mind that if these funds get into the market, at some stage they need to exit, and especially if the fundamentals are not really changed that much. So, you know, we're all kind of waiting to see when that pullback will happen, but we kind of need a trigger. And we haven't gotten the trigger yet.
What role can we discern China has in all of this? It's always the story when a lot of commodities start to move in this way. Maybe there's going to be a little more effort in terms of infrastructure and housing investment in China, or perhaps just trying to acquire more stockpiles of things like copper. But does that have a relationship to what's been going on short term in the market?
It has, actually. You know, just for some context, copper is a 25 million ton market. China consumes 15 million tons, so more than half. About 2 million of that goes into the real estate market. We thought with real estate being flat on its back, we thought prices will probably struggle. They didn't. That's because the Chinese kind of made up for that demand by putting a lot of money into AI spending, into infrastructure spending, cables, transmissions. So the Chinese have picked up their copper spend outside of the real estate side. Stockpiling, I doubt China is going to be buying copper for its stockpile at $5 a pound. It's just too rich for them.
And then just love a word on gold, because it obviously sort of feeds off of sort of a different energy source in terms of why people want to own it, but a similarly pretty aggressive move. The folks love what the charts look like at this point. Where do you think that might head?
Yeah, gold, again, one of those that kind of is defying the odds. We thought with the dollar strong and with rates rising, gold will be under pressure, but that hasn't been the case. I think the gold market is looking at a couple of things. It sees inflation remaining high. It sees, obviously, the debt hemorrhaging pretty much from every major economy, which doesn't bode well for kind of the long-term viability of the financial system. So people are seeking some safety in gold and to some extent in Bitcoin. And then similar to the other metals, you also have fund participation in gold and lately in silver, which got to an 11-year high yesterday.